For over 50 years, the global financial system has been dominated by one silent giant, SWIFT. It's the invisible network that moves trillions of dollars every day between banks, corporations, and governments across borders. You probably never see it, but SWIFT is the reason your international wire transfer works, or doesn't. But what if I told you that the world may be witnessing the beginning of the end for this legacy system? What if a digital asset born out of the crypto revolution is now being positioned as a faster, cheaper, and more transparent alternative to the very infrastructure that has ruled for decades? That's the battle we're diving into today, XRP versus SWIFT. Let's start by understanding the old guard. SWIFT, short for the Society for Worldwide Interbank Financial Telecommunication. SWIFT is not a bank, and it doesn't move money itself. It's more like a messaging system, a secure network that banks use to send payment instructions to each other. Imagine it like sending a letter where the letter says, "Hey, Bank A wants to pay Bank B this amount." But here's the problem. The letter still goes through a slow, multi-step postal system. Transfers can take days, especially if they require multiple intermediaries, and fees rack up at every step. That's where XRP enters the ring. Created by Ripple Labs, XRP is a digital asset designed specifically to handle cross-border payments with near-instant settlement. Unlike SWIFT, which only communicates payment information, XRP can actually move value. In the Ripple ecosystem, the XRP ledger acts like a real-time bridge between currencies, removing the need for correspondent banks. A transfer using XRP takes about 3 to 5 seconds and costs a fraction of a cent. That's a huge leap forward in speed and efficiency. But it's not just about speed. Transparency and traceability are major pain points in the SWIFT system. Payments often pass through multiple intermediaries, making it difficult to track where the funds are at any given moment. Errors and delays are common, and resolving issues can take days or even weeks. XRP's blockchain-based ledger, on the other hand, provides real-time visibility. You can see when the payment is initiated, confirmed, and settled, all within seconds. Still, SWIFT isn't sitting idle. In response to pressure from innovations like XRP and others, SWIFT launched its own upgrade, SWIFT GPI, or Global Payments Innovation. It introduced features like same-day payments, end-to-end tracking, and better transparency. But even with these improvements, SWIFT still relies on the same network of correspondent banks and legacy infrastructure. It's like putting a faster engine in an old car. It runs better, but it's still not built for modern roads. Let's talk adoption. SWIFT is used by over 11,000 financial institutions in more than 200 countries. It's deeply entrenched. Governments, central banks, and major institutions rely on it. XP, by contrast, is still fighting for regulatory clarity, especially in the US, where Ripple has faced an ongoing legal battle with the SEC. That lack of regulatory certainty has slowed down XRP adoption, particularly among American banks. But outside the US, Ripple has been making strategic partnerships with financial institutions in Asia, Europe, the Middle East, and Latin America. It's not a theoretical replacement. It's being tested and used right now. And here's where it gets really interesting. In countries with unstable currencies or limited access to international finance, XRP could provide a lifeline. Instead of relying on SWIFT-connected banks that charge heavy fees and delay access to global markets, financial institutions could use Ripple's on-demand liquidity solution. It allows them to convert fiat into XRP, send it across borders in seconds, and convert it back into fiat, all without pre-funded Nostro accounts or correspondent banking relationships. That's revolutionary. We're seeing a global realignment of power in the financial world. As nations consider alternatives to the US-centric financial infrastructure, XRP represents a neutral, decentralized asset that could facilitate trade and settlement beyond politics. When Russia was removed from SWIFT in response to the war in Ukraine, it exposed the geopolitical vulnerability of being tied to a single system. This opened the door for discussions around multipolar payment systems, and for technologies like XRP to step in as a borderless solution. Let's go deeper into the battlefield. Real-world adoption. While SWIFT is still the default infrastructure for cross-border financial messaging, Ripple and XRP are quietly building their own highway system beneath the surface. Countries like Japan, Thailand, the Philippines, and Brazil have already begun leveraging RippleNet for real-time remittance services. In Southeast Asia, SBI Remit, one of Japan's largest money transfer providers, has partnered with Ripple to connect with institutions in the Philippines and Vietnam, drastically reducing costs and processing times for overseas workers sending money home. In Latin America, Ripple has formed alliances with companies like Tranglo and Bitso to improve cross-border payments between countries like Mexico and the US, which is one of the largest remittance corridors in the world. These aren't small pilot programs. We're talking about millions of transactions being processed annually using Ripple's on-demand liquidity, ODL, powered by XRP, and yet resistance persists. Central banks and regulators are naturally skeptical of anything that threatens the existing financial order. XRP's value proposition, moving money instantly across borders without intermediaries, is not just disruptive, it's threatening. It challenges the fees, delays, and controls that legacy systems rely on. And unlike stablecoins, which are pegged to fiat currencies and often backed by reserves, XRP is not tied to a single nation or central bank. That neutrality, while a strength in some contexts, is also a red flag for regulators who are still figuring out how to categorize and control these digital assets. The SEC lawsuit against Ripple is a prime example of how regulation can slow down innovation, accusing Ripple of selling unregistered securities. The SEC triggered a legal battle that shook investor confidence and pushed some US exchanges to delist XRP temporarily, although Ripple has scored partial victories in court. The uncertainty around XRP's legal status remains a hurdle for a large-scale adoption in key markets like the United States. But despite the lawsuit, Ripple has continued to grow outside the US, doubling down on jurisdictions that are more crypto-friendly. Meanwhile, SWIFT is doing its best to modernize. With SWIFT GPI, they've managed to reduce settlement times significantly, in some cases, bringing them down to under 30 minutes. They've also launched experiments with central bank digital currencies, CBDCs, and even began piloting tokenized asset settlements using blockchain technology. But here's the catch. Even with these efforts, SWIFT remains dependent on the same multi-layered banking relationships and still lacks native settlement capability. It's like upgrading the plumbing in an old house. It helps, but it's still an old house. The real difference lies in architecture. XRP operates on a trustless, decentralized ledger where transactions are validated by independent nodes. There's no need for counterparties to pre-fund accounts, and value can be moved directly from sender to receiver, anywhere in the world. In contrast, SWIFT relies on a trust-based system where each intermediary bank must have pre-existing relationships and sufficient liquidity. That's capital trapped in Nostro and Vostro accounts, doing nothing while waiting for someone to use it. Ripple's model unlocks that capital. It's not just about saving time, it's about unlocking trillions of dollars in dormant value. Let's take an example. A small business in Kenya wants to import electronics from South Korea. Through the traditional system, the Kenyan bank must have a relationship with an intermediary bank in Europe or the US, which then connects to a bank in Korea. Each link in that chain takes a cut, adds delay, and increases risk. But with Ripple's ODL and XRP, the transaction could occur in seconds. Converting Kenyan shillings to XRP, sending it across the globe, and converting it to Korean won, all without intermediaries. That's financial empowerment at scale. And while XRP faces skepticism, it also enjoys strong technical advantages. It has a consistent settlement time of around 3 seconds, can handle 1,500 transactions per second, and is energy efficient compared to proof-of-work systems like Bitcoin. Its consensus mechanism doesn't rely on mining, which makes it more sustainable and scalable. 2 key factors for institutional adoption. But the conversation doesn't end with technology. There's also the question of control. Governments and central banks aren't just interested in efficiency, they want oversight. They want anti-money laundering protocols, sanction compliance, and control over monetary flows. This is where Ripple's approach differs from many in the crypto space. Ripple has intentionally positioned itself to work with regulators, not against them. Unlike the cypherpunk ethos behind Bitcoin, Ripple's mission has always been to partner with banks, not to replace them. And that strategy might be its secret weapon. While Bitcoin is viewed as a store of value and Ethereum as a decentralized computing platform, XRP is positioning itself as the utility layer of the global economy, the plumbing that makes everything else flow. Ripple isn't trying to disrupt the system by blowing it up. It's trying to upgrade it from within. And that makes it a much more palatable option for governments seeking innovation without losing control. Still, it's not a clear victory. SWIFT has history, scale, and institutional trust. XRP has speed, transparency, and a decentralized edge. The question is whether the world is ready to transition from the familiar to the future, from SWIFT to a blockchain-based global liquidity network. Now let's take a step back and zoom out. Because this is no longer just a conversation about cross-border payments, it's about the future of who controls money itself. And behind the curtain, a much larger game is being played. A global contest over liquidity, sovereignty, and influence. The battle between XRP and SWIFT is not only technological, it's geopolitical. Let's talk detail. For decades, the US dollar has served as the global reserve currency. Most international trade, oil sales, and foreign debt are settled in dollars. SWIFT, being a Western-controlled network, enforces this dominance by acting as both infrastructure and gatekeeper. When nations step out of line, they risk being cut off from SWIFT, as Iran was in 2012 and as Russia experienced in 2022. That exclusion acts as a financial weapon. But what happens when countries start searching for alternatives? This is where XRP's neutrality becomes a strategic advantage. It's not tied to any one country, government, or central bank. It operates on a decentralized ledger with no national allegiance. In an increasingly multipolar world, that matters. Countries like China, Russia, and members of the BRICS alliance are already pushing for payment systems outside of US influence. Some are experimenting with central bank digital currencies, CBDCs, others with bilateral trade in native currencies. But none of those solutions are global. None are neutral. XRP could be. If the global financial system fragments with Western nations clinging to SWIFT and emerging economies seeking decentralized escape hatches, XRP could become the bridge asset that keeps everything connected, not by replacing national currencies, but by acting as the medium that transfers value between them instantly and securely. Imagine a world where the Nigerian naira can be converted to the Brazilian real in seconds, without touching the dollar or relying on correspondent banks. That's the vision Ripple is betting on. But here's the twist. This future isn't guaranteed. XRP faces serious headwinds, regulatory ambiguity, lack of mass consumer understanding, and resistance from powerful incumbents. Meanwhile, SWIFT is accelerating its blockchain experiments, integrating tokenized asset flows and partnering with fintech firms to maintain relevance. They're not just sitting still, they're adapting, because they know that if they don't evolve, they'll be replaced. The question becomes, can XRP scale fast enough to matter before SWIFT becomes too modern to fail? It's a race of trust, technology, and timing. And perhaps most importantly, it's a race of perception. Because in the end, institutions don't adopt the best technology. They adopt the one they trust, the one that fits their compliance frameworks, their reporting requirements, their geopolitical alignments. Ripple's challenge isn't just to build a better system. It's to convince the world it's safe to jump. So where does that leave us? On one side, you have SWIFT, 11,000 plus banks, decades of legacy, and deep institutional roots. On the other, XRP, a lightning fast, decentralized asset with real-world use cases, global partnerships, and a bold mission to reshape how value moves around the planet. In truth, they may not destroy each other, they may converge. We may see a world where SWIFT uses XRP as a bridge asset, where Ripple partners with central banks to enable faster CBDC transfers, where the two systems don't compete but collaborate, each playing to their strengths. Ripple as the engine, SWIFT as the interface, together forming a hybrid financial network that is faster, cheaper, and more inclusive than anything before it. But make no mistake, this isn't just a tech upgrade, it's a paradigm shift. For decades, value moved at the speed of trust. Now, it can move at the speed of light. XRP, isn't just challenging SWIFT, challenging the idea that a few institutions should control the global flow of money. It's opening a door to a world where value is fluid, borderless, and frictionless. So, can XRP kill SWIFT? Maybe not with a sword, but with evolution, with real-world utility, relentless innovation, and a willingness to play the long game. Ripple and XRP are forcing the world to rethink what money can be and how fast it should move. The old system won't go quietly, but it will have to compete, and that competition, that's where the future is being written. And maybe, just maybe, the most powerful revolutions don't begin with protests or headlines. They begin in silence, in code, in forgotten servers, and visionary minds who dare to imagine a world where money moves without borders, without middlemen, without delay. The world won't change overnight, but it's already shifting beneath our feet. Every second XRP settles a transaction. Every time a bank tests a blockchain. Every moment someone realizes they can send value across oceans in an instant, a piece of the old world fades, and the new one takes root. So ask yourself, what kind of world do you want to live in? A system built on legacy, or a future powered by freedom? If this resonated with you, if you see the bigger picture now, then it's time to join a movement of minds seeking truth and financial evolution. Hit that subscribe button and become part of the change with us here at Wealth Unlocked, where we decode the forces shaping money, power, and the future. And if you believe we're on the edge of a financial breakthrough, comment the word disruption below. Let's flood the algorithm with the energy of those who see what's coming. This is Wealth Unlocked, and your future just got clearer.